Linda here. Hello everyone, this is Yoyo. We're all from Midas. Welcome back to our channel. Before we start, please like and subscribe to our videos if you like our channel. We all know that there are initial upfront costs when buying a property. If you haven't seen, please check out our previous video up here about 10 initial upfront costs about buying property. But did you know that there are also ongoing costs as well?
Yes, Linda. There are also multiple ongoing fees, which can cost up to 10 grand a year in addition to your interest payments. So today, we have summarized 15 ongoing costs that you will have to be aware of. This is a very obvious one and probably going to be the biggest holding cost depending on the loan amount, loan term, and loan type, etc.
Yeah, so Yoyo, do you think that I should pay interest only or P&I?
I think it depends on your cash flow and the loan type. And if you are a home buyer, most banks require you to pay P&I and they offer lower interest rate if you do so. Well, if you are an investor with multiple investment properties, you can opt for an interest-only loan if your cash flow is a bit tight.
Otherwise, I suppose if cash flow is not really a problem, generally speaking, you can pay P&I. That may be a better strategy for you because it'll pay your fees on it quicker.
Absolutely. If you're a homeowner living in the house, you have to have building insurance, and it's always better to have home content insurance as well. If you live in a unit or townhouse in a complex, you need to pay strata fees annually, which covers your building insurance.
What about if you're an investor?
If you are an investor, in addition to the building insurance, you have to pay landlord protection insurance, which limits the tenant-related liabilities, things like tenants probably damage your properties and they don't pay rent on time, etc. So each insurer has their own terms and conditions. So make sure you are clear on what they offer.
So as an owner-occupier, how much would I expect to pay per annum for home and contents insurance?
Yep. If you live in the house, it depends on the location, crime rate, and whether it has been affected by the flood or bushfires. For content, it's totally up to how much value you would like to be insured. So the total cost for the building and home content insurance for $500,000 property is between $1,000 to $2,000.
Cool. So what if you are an investor? Because you mentioned that we need to have landlord insurance on top of the building insurance. So how much might we be looking for that?
So the landlord protection insurance costs between $300 to $500.
So Yoyo, you mentioned before that if we pay strata fees, then that covers your building insurance.
Yes, Linda. The amount of strata fees depends on the number of facilities in your complex. Generally speaking, the more facilities and the more expensive your body corp, which varies from $2,000 to 10 grand, and you pay it every 4 months.
So also, if as a consumer price index increases, then your strata fees increase as well, and the older your property, the more likely the strata fees are going to be more expensive.
Councils need to charge rates to increase revenue so they can provide services and infrastructures to their community. As long as you have any type of the properties, you will need to pay council rate, which is normally charged quarterly.
Rates will usually cost you around $2,500 a year, but that value will vary depending on which suburb you live in, which council you live in, the land size of your property, and also whether your property is an owner-occupied or investment property. Usually an investment property will have higher council rates.
Yep.
Water bills in Queensland are called utilities and also charged per quarter. The total cost of your bill is made up of service charges and usage charges. And since as an owner-occupier, you would pay both because you're using all the water.
Yes, Linda. Even if you are an investor, you still need to pay service charges, but your tenants can pay for the extra usage. This may differ from state to state and owner to owner.
If you decide to buy your own place, these are some of the bills that you will have to pay. Obviously, if you're renting, this may or may not be a cost depending on your landlord, but as a homeowner, you'll have to pay for electricity and internet.
Land tax is a state tax calculated by your freehold land, and it varies from state to state. In Queensland, you don't need to have to pay land tax if you live in your own home. Well, if you have investment properties, whether it's under your own name or under trust or company structure, you will have to pay land tax yearly if your land value exceeds the threshold.
And in Queensland, the land tax threshold for an individual is $600,000. The threshold for a trust or company is $350,000. And for an absentee not living in Australia, it will also be $350,000. Click the link below to find out more specific rates of land tax in Queensland for your particular situation.
Most banks charge annual or monthly fees. For instance, a $395 yearly fee, which offers you an offset account facility, credit card, valuation services, etc. So you should always ask your bank to value your property once a year since it is free, which is usually neglected by people.
And the fees are not that expensive, but they are something to take into account, especially if you have multiple loans across different banks.
Maintenance and renovations can definitely take up a lot of savings depending on the condition of the property. Generally, newer houses will have less cost than older ones.
I totally agree. You may have lots of small costs that are really unexpected and just add up. For example, a leaking tap, a broken water pipe, a broken water heater, perhaps you might have a broken oven or additional power points, or you may have larger repairs such as painting the inside and outside of your home, repairing a garden retaining wall, building a new fence, or installing security screen doors or new carpets.
Some people will put aside 3 to 5% of their property price to keep themselves covered. Pest and termite control is a must. It generally costs anywhere between $300 to $500 a year.
And if I'm not wrong, Yo-Yo, that's 10 costs, ongoing costs to owning a property. Are those the only costs that we need to be aware of?
Yes, actually, if you are an investor, there are 5 more fees you need to take into account. If you have invested in the properties, it's always better to hire an experienced property manager to look after your property. They tend to charge anywhere from 7 to 25% of your rental income, depending on if it's a short-term lease, long-term lease, or Airbnb, etc.
So property managers will also charge a week's rent plus GST when they get a tenant, is that correct?
Yes, you are right, Linda. That leads to the next expense. When the lease ends and the property manager has found a new tenant, you are charged 110% of your 1 week rent. However, if the same tenant renews the lease, normally the property manager will charge half week's rent plus GST.
Gotcha. So as a Midas client, you will not be charged renewal fees, which could actually save you a few $100s a year.
As an interstate or overseas investor, travel and accommodation would be extra costs. So always double check with your accountant whether they are tax deductible or not.
So an accounting fee will cost you upwards of $100 depending on the complexity of your particular property portfolio. Of course, you can do it yourself and that will be free. But keep in mind an accountant will help you assess your property depreciation and also any tax deductible expenses. And also keep in mind that an accounting fee itself is tax deductible.
Absolutely. Bear in mind, the depreciation report will cost you roughly between $400 to $700, which is tax deductible, and it is a once-off fee, as you can use the report for subsequent years. Oh, the lovely tax. That's probably the last thing we want to pay. As an investor, you will have to pay tax on any positive income you earn from your property, which is you use your rental income minus all your expenses and minus all the property depreciation value. For example, if you have earned 30K in your rental income and you have 10K for all your expenses and another 10K for depreciation, so you will have to pay tax on the remaining 10K.
However, if your expenses plus your property depreciation value combined is higher than the actual rental income that you earn, then this is a negatively geared property, and generally speaking, you will receive a tax refund from the government.
You are right, Linda. That's all for today's video. These 15 ongoing expenses may not include everything, but it gives you a good place to start, as they do cover most of your costs.
And do just remember, guys, with all the expenses that we did talk about, the exact amounts will vary between property to property and state to state. So don't forget to check your own state's rates and regulations.
Absolutely. If you liked today's video, please give us a thumbs up and subscribe.
And don't forget to click the notification bell so you don't miss out on our new videos.
Also, comments below if you have any questions or new topics you would like to know.
Thanks for watching, guys. We hope to see you next time. Bye.
Gotcha.
And